Good morning, traders. Today is Monday, September 12th. My name is Charles, and this is the Pirate Traders live stream. The bulls are back forever. All right, well, the bulls are back in charge of the market here. Why do I say that? Well, we have a trend, and it is a lot stronger than I thought it would be when we bounced off those lows. So we started the trend last week when we had value overlapping to higher. We got continuation, and then on Friday what we had was a gap up, which is a sign of quite a bit of momentum in the market. We had a gap and go, so the market continued to trade higher throughout the day. We are now opening once again here on Monday with another gap. Okay, just like the one that we left behind on Friday. The scenario is exactly the same. When the market opens, the first order of business will be to get a counter auction to that overnight inventory, which is net long. So the first move we're expecting at market open is to the downside, and then seeing where it finds support can give us an indication of what to expect throughout the rest of the day. Does the market pull back down and find support before it gets to Friday's high, or does it find support at Friday's high? Either scenario is bullish for continuation to the upside. That is what we call a gap and go. So if the market finds support at Friday's high, which is 40.777, if they find support there or anywhere above there and turn around and start to head higher, just like it was on Friday, that is bullish for continuation to the upside as a sign that there is still momentum, that bullishness is still in the market. If we pull back down to Friday's high and we don't find support there, well, then that is a sign that we've run out of momentum, and we'd be looking for the market to pull back and repair some of the weakness left behind last week. So I'll be looking for support at 77, but if we don't get it and the market starts to trade back down into yesterday's range, I'll be looking to repair these weak references at 40.63 and 40.62. And then monitor for continuation lower from there. Okay? So first order of business, counter auction to the downside. Do we find support? If so, I'm instantly bullish. If not, I'm bearish to repair these weak references. If we just zoom out for a second and look at the daily, it does make perfect sense. If the swing traders were waiting to get in here at the support from the February lows, then they would be holding to go all the way up and test this resistance once again, or at the very least to test a moving average on the way up on the daily. Man, we're right on top of the 20. That's interesting to note. So if we get continuation higher today, if the market can keep pushing through this moving average on the daily today, that is bullish for continuation of this trend. But if it fails and we start to bounce off of there, we may need to head all the way back down and fill the gap from Friday. So that puts even more importance on this gap and go. Do we find support here this morning or not? Can we maintain the momentum? As far as continuation to the upside, if we do get a gap and go, the market pulls down, it finds support. The first target is to test the overnight high at 41.15 and see, can we get up there? And if we do we get support? We then have resistance at 41.25 and 41.50. I think that resistance at 41.50 will be very, very strong. So I don't necessarily think the market can get much further than that today if we do get a gap and go. But we could certainly head up there and test that area. All right, the market's open. So we are looking for a counter auction to the downside, and do we get support above yesterday's high, above Friday's high? It's also worth noting in your trading account, today would be a good day to consider rolling over to the new contract, the Z contract. So that would be ESZ or MESZ. Okay, well, they're immediately pushing higher. That's a little bit bullish to see. Although I will say the fact that we opened and only went one tick below the opening price and then started pushing higher, it makes that low weak to me. So keep in mind that on a gap day, one trade setup to consider is if they try to take the market higher first thing in the morning and they can't, and they pass back through the opening price again, you can short it at the opening price looking for that gap fill and just put your stop above whatever the high of the day is prior to it passing back through the opening price. One setup to consider. All right, so as we start to pass through the opening price here at 41.07, that means they are heading back down to try to fill the gap once again. Tried to take the market higher, couldn't do it. Got to pull the market back, looking for support. Remember, if they find support anywhere above 40.77, it is bullish for continuation to the upside as a gap and go. But it would seem the first order of business as an attempt, at least, to fill that gap. Daniel, December contract prices are 20 points different from September? That can't be. 20 points? Oh, you're right. That's a big difference. Definitely want to be trading December at this point. All right. Well, so far, this is a gap and go. I mean, we've almost completely pulled the ticks back to the zero line. Not quite, but pretty close. And we haven't really pulled price back at all from the opening price. So this is looking bullish right here. If they can stay above the opening price, 41.07, I would look to test the overnight high and then see if we can get some new buyers up there. Yeah, I'd say we have ourselves a gap and go. I'm bullish as long as we stay above 41.05. Basically looking for this node right here around the opening price to act as support for continuation higher. As long as we can stay above there, I'll stay bullish. If we pass back through it again, though, we're heading back for that gap fill. So I want to be neutral right away. A period high is now considered weak because it's one TPO off from the overnight high. Increasing the odds, we need to push back up there and get a little more excess. Okay, A period high is still weak. Needs one more tick for good access. Okay, so with the repair of the week high, now the question becomes, do new buyers step in up here at the overnight high? Or do we run out of business and start to pull back down? So we can keep an eye on those ticks. Do the ticks keep trending higher? They actually kind of need to pull back a little bit. They're almost a little too hot. Got some FOMO buying. Chilling with Dylan. Tough waiting to buy with the tick so overbought. Yeah, I mean, you can't wait around with a gap and go. You got to just get in the position, clinch those butt cheeks, and see where it takes you. Okay, so the first set of resistance is going to be up here around 41.25. Got a set of single prints there. Should be some resistance to come back and test that overnight high. Daniel, it's tough for me to calculate the positions as I use CFD and they follow continuous pricing. So it's hard to calculate the targets Charles is defining. Um, if if you can look at that chart, that CFD chart on market profile, or even with just volume profile, you can see where those large nodes are. That's the most important support or resistance. But yeah, as far as like single prints and stuff like that, you'd need market profile on it to see those. ASME, shorts getting squeezed. Yeah, I would say so. Both intraday and bigger picture on the daily. John says, my shorts are tight. Real tight. Just how I like it. Okay, so we're looking for some resistance here to head back down and test that sort of 17 area for support. All right, well, no resistance at the base of those single prints. That's a little bit bullish. Next potential resistance is this node of cumulative volume that starts at about 32. All right, well, I'm officially trailing my stop on my long here. because I do think they're about to butt into some resistance, and we got very thin volume. So I'll be looking for a pullback at the very least to 22, looking for support. So I'm going to start trailing my stop with price. For what it's worth, All right, well, the B period creating a poor high right as we push up into resistance. So we would be looking for the market to push away from that poor high, looking for support, but leaving it behind increases the odds that we're going to find support and come back to repair that poor high. We also have the value area now butting right up against the high of the day. That also increases the odds. The market needs to move higher to get some excess to the upside. So both of those things are bullish. Okay, well, with the market having gotten itself a little bit overextended here, I'm not sure how much of a pullback we need. So these are three potential support levels: around 23, around 20, and then half back at 18 to head back up and repair that poor high. Daniel, your stop is below support. Yes, sir. How you trade it is up to you. You can use a tight stop. Then you have less of a likelihood of the trade working out, a higher chance that you'll get stopped out. Or you can use a looser stop, increasing the odds you won't get stopped out, but taking on greater risk. Each trader must know their own risk profile and what works for them. Jay Trader, will that be today's tweet? No, I don't know what today's tweet's going to be. Let's see here. I got a quote from Charlie Munger, a quote from Ray Dalio, a quote from Martin Scorsese. We'll have to see which one I pick. Design now. Quote from Pappy. I wouldn't dare. I know better than to put words in Pappy's mouth. I'm rich, Mitch. Is it Mitch? Is that what he said? I think the spelling is off there. Genghis Khan predicted the internet and its unreliability. They say he was ahead of his time, that Genghis Khan. Mr. Gee, I lost money using stops on Friday, get wicked out, and continued to the upside. I removed my stops from BTC and Ether yesterday before the pumps. Sure enough, before the pump, there was a wick down. Hey, man, trade however you want. I don't recommend that at all. I'd rather get stopped out and have to get back in than to take on the risk of the market dumping and I'm stuck in a trade. All right. Well, the market finding support up here at the upper end of the range is obviously bullish, as it is a sign of a trend beginning to form. Right? One signal that the market wants to trend a certain direction. It'll build up a bunch of volume. It'll push higher, build up some volume, push higher, build up volume, push higher, and it never gives the market a chance to come back down and test those previous nodes. That is a sign of a trend. So if we head up now and repair this poor high without pulling down at all, that's bullish for continuation. WSS, what is my analysis of the put call ratio? I don't have one yet. I haven't really been able to look at that enough to really gain any insights from it. I'm just kind of letting my brain glance at it every time and kind of start to build a knowledge base of how it moves and what it does. But I'm just nowhere near experienced enough to glean any real information yet. We shall see. As far as I'm concerned, what I see is a gap and go. I see value higher. I see building volume, pushing higher, building volume. So right now, all the arrows are pointing up. Scuball, it won't hold. Oh, what's that? This higher price? Scooball says we're poking at the support and turning that support into resistance. I would say it's a little early to make that call. I'm looking at it. I can't tell if we're building support or about to break it. Designed up. You're 3 ticks off the high. That's resistance. Shit. Shit. He was talking about like 28. At the time, we had pushed below here, and it was acting as resistance, but it only lasted for a few seconds. All right, there's the repair of the poor high. Okay, just zooming out and looking at the daily here. I would say that next major resistance that we have above us, which is that base of the C period single prints down left behind from 826 at 41.50. I do think that that's going to be sort of the end of this move to the upside. I don't know for sure we'll get there, but I don't think we're going to get beyond there. And the reason that I'm thinking that is just because I'm noticing that we're pushing back up into previous balance areas on the daily. So you can see from this previous balance area, we tried to break out to the upside, failed, pulled back into it, balanced again, broke out to the downside. We got a big move, right? We got excess to the downside. Normally what you get if you get excess to the downside is the market either rotates sideways at lower prices, looking for continuation from there, or it pulls back up with price to repair that excess with price. Okay, so if that's the argument of what's happening here, that the market is just absorbing the excess down from the break of this previous balance area, then we should run out of steam at the absolute latest towards the upper end of that balance, which is around 41.50, 41.60 area. So if you think about that this is likely the area where the market is going to run out of steam, and then you add to it that specific technical reference for market profile being right at 41.50, I don't really know that the market's going to be able to get, you can actually just see it in the cumulative volume here. I don't think we're going to be able to get through this. So this may be one of those days where the gap and go does most of the going in the first hour and a half of the day, and then we go sideways. That is kind of what it's starting to feel like to me. Thoughts on NQ Daily? Yeah, exactly the same as the ES. You're pushing up into a previous balance area. So you kind of had two balance areas here. Broke back through, they became one solid balance. And so, yeah, same as the ES. You're pushing right up into that previous balance now. So if all this is just the market absorbing the excess to the downside, this would be where you would start to run out of steam. So somewhere between like 12,900 and 13,200. Start to come back down. I would pretty much just say intraday for the moment. Let's just monitor the momentum. When we print the C period, can we keep it above the B period low, the D above the C, so on and so forth? And we'll just assume that the momentum is over when we get cessation. Lamus, can we look at NQ support zones? Faux shizzle. All right, so first and foremost, man, gap inside a gap. Your gap fill is like 12,615. That's Friday's high. Your first potential support is 12,815. Below that, I would say the halfback at 12,779, which was also the overnight high. So that should act as good, strong support in there. And then the area just above the opening price, pretty much from like 12,730 to 12,740. That's the last support before you start to head back to fill that gap again. Next major resistance for the NQ, 12,850 and then 12,890. Scoopall, what about the idea that the market making a higher low on the daily is the sign of the end of the huge trend downward? No, I don't see that. I mean, it's the end of this trend, this more recent trend right here, but not this one, not the trend from all-time highs. That's still bearish. Okay, so as we print the C period here, we left some single prints behind from the B period. We expect that increases the odds. The market will need to pull back and backfill those, but we'll be looking for support now at 41.3150 for continuation higher. As far as leaving you guys with thoughts to carry forward, like I said, looking for support at 31.50 for continuation to the upside. If the C period does pull down below the B period low, 41.26, it is not necessarily bearish, but I would see it as sort of back to a neutral stance. I would see it as less bullish. If it pulled below that B period low, I'd still be looking for support around the halfback at 41.20 and then around the overnight high at 41.15. And if we can then, so let's say the C period comes down, it finds support down here. Whoops. C period comes down, it finds support down here, turns around and it breaks the initial balance once again. You could look for a new trend to the upside as the gap and go is very bullish for continuation higher. And of course, if we don't break that B period low and we immediately get the C period above the B period high, then the market is one time framing higher, and you can just look for continuation until one TPO breaks the low of the previous. So all in all, I'm pretty bullish here. The only thing that would really get me bearish at this point would be passing back through the opening price again, in which case I would assume the market is looking to fill the gap. But as long as we stay above that open, I assume neutral to bullish for the rest of the day. With that, I bid you all farewell, wish you the best of luck, and look forward to seeing you here tomorrow morning. If you're a member of the brigade, you know what time it is. Let's ride.